I'm in New York City for REIT Week 2011. I'm joined by Eric Bolton, Chairman and CEO of MAA. Eric, your company posted better than expected results in the first quarter. What caused the boost to start the year?
Operating results were better than we expected. We continue to see revenues coming in better than we initially anticipated, driven by very strong rent growth, and really that is what's driving the better than expected performance, and continue to see that playing out over the course of the year.
And have you seen any shift recently in your tenant base at your communities, or had to adjust what you're offering?
Not really. Physically, I mean, the properties are most of what we own is fairly new, and so it's fairly contemporary, meets the needs of today's renter. Honestly, the way our business model is changing more than anything is how we transact our business with both our existing residents and prospective new residents, in terms of the internet and how we are able to source traffic. More than close to 60% of all of our leasing traffic now originates via the internet, so they come in much more educated, much more informed about what the community offers, which helps in a lot of ways. We have over half of our residents now paying their rent over the internet. So it continues to, really, our business model is changing to cater to today's more tech-savvy consumer, and which is a good thing for them, and certainly it's beneficial to us as well, in that it drives more efficiency into our operation.
And by all accounts, the demand drivers are very positive across the multifamily sector. In your target area of the Sun Belt region, is there enough supply on the market right now to meet those demands, or do you think we're going to have to see some new supply built?
Well, clearly new supply is going to come at some point. We're at a point in time right now where, unlike in past recovery cycles where we began to see recovery on the demand side, typically supply gets ramped up pretty quickly. But given the lack of financing for construction financing to some degree, particularly in a lot of our markets, we continue to see supply remaining at historically low levels. We'll deliver fewer units this year than we've delivered in decades in terms of an annual delivery rate. So we continue to believe that supply is going to remain muted for a couple of years. I do believe, though, eventually as the economy begins to recover, financing markets begin to recover, we very likely will begin to see supply ramp up at some point. But I think that's more of a 2014, maybe late 2013, before we begin to see supply come on in any sort of meaningful way.
Eric, thank you very much for joining us.
Thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.